Massive moves across Bitcoin, cryptos, and the stock markets. If there's one thing we want to see cancelled, it is the recession. It's a recession that's been hanging around for years but has never actually presented itself. Today, let's update the Bitcoin chart as it has broken out of our key 50% level. The stock markets have also continued up, this time 3 green weeks within 2% of a new all-time high. And it was only 2 weeks ago that everyone else was calling for a recession at the bottom of the market. Yet again, the masses have missed out. Don't be part of the masses. Join us here on your home of macro cycle analysis with me, Jason Pizzino. We're covering Bitcoin, cryptos, the stock markets, and the real estate cycle. All right, guys, let's kick it off with yesterday's video. A really good signal that we're getting close to the end of a consolidation, at least on the short term. Now, the views, very, very low. Who cares about the ego thing with high views, low views, whatever? I use it as a signal to see whether people are hanging around or they're not. And typically, towards these boring times of the market, which we went through in the comments as well, basically a lot of people weren't interested in the market. Then all of a sudden, we see Bitcoin break out of that key resistance level, $61,500. It's closed at $64,000 yesterday. There it is, dead on the money. And so far, we got that one nice daily close above both of the swing tops and the 50% level. So this was the little area that we've been watching now for many, many weeks. You could see that Bitcoin bounced off the short-term 50% level. So that was a test. You had a nice bullish bounce, and then a swing bottom came in using our Gann swing indicator. And then these next few days were really interesting. They tested the 50% level not once, not twice, 3 times, and then we had the breakout. And so if you're familiar with that as a premium member, TI Premium, you know that we've got that Gann signal as well. You got that 4 test, that 4-time test. And again, we saw that on a very short-term time frame there on that breakout. So really good signs, at least in the short term, and potentially flipping to the longer term. Now, of course, in the title as well of the video, I've talked a lot about recession being cancelled. The main thing that I want to look at today is, well, the news headlines, they've come and gone, and they do this every single day of every single week, of every single month. People get really swept up on unemployment numbers. They get swept up on FOMC meeting minutes. They get swept up on Powell speaking, which has been the big one in the last 24 hours. And next week, it's going to be something else. It'll be CPI for Australia. It'll be GDP here. It'll be unemployment claims that get revised yet again. But the big headlines here are the Dow closes up, the NASDAQ closes up, the S&P 500 also closes up, and it's all because of Mr. J. Powell talking about how he's expecting rate cuts to come, whether that's this time round for September in the next 25 and a half days, or is it going to be the next meeting in November after the election? That's anyone's guess, but of course the market is now anticipating at least one cut here, looking at it going down to 5.25%, and then a double cut. So as you can see with the headlines, it's basically human emotions. They get really excited when they hear certain things, and then that dies off. The exact same thing happened just 2-3 weeks ago at the low here with the Japanese yen carry trade. Extreme fear. Everything was imploding. It was a massive sell-off throughout the entire market, and we were expecting a recession. And now all of a sudden, Powell speaks 3 weeks later when the market's already up a lot here for the S&P 500, 10.5%, for the NASDAQ, 15 or so percent. And of course, Bitcoin's up 30% from that low. Now it's all forgotten. It's all in the past. The recession's over. We've got out of it once again. But of course, the main thing here is to continue to follow the charts. And this was part of our signals that we talked about at the peak in July. We had 3 days down from a very significant top, 3 lower tops, lower bottoms. And this is what we're looking at to lead to a more significant correction to come in the market than any time previously. Now that happened, and the market is climbing out of it in a pretty reasonable V-shaped recovery. In terms of timeframes like previous corrections, you got 44 days in the previous correction here in April, made it back to a new high, another correction, and then onto this last peak into July. We're at 38 days now from the top to the current trading day. So basically, within this next week, it would equal the same correction from last time. So I think this is part of wiping out that fear of recession for at least the US economy. Now, we talked about this specifically on the channel 5 months ago, back in March for the Bitcoin top, and then we talked about it in July, so a month and a half ago for the S&P 500 top. Let me know if you're watching those videos at the time by hitting the like button. I want to see how many people were actually on and listening to what we had to say at that time, looking at the analysis through those peaks in the market. Now, it's for very good reason that I wanted to bring up those previous tops, because I think we are going into another new all-time high for Bitcoin here. But before I get too carried away, this was the analysis at the time. That's March there. This video is from early April, looking at the possibility of Bitcoin going into a longer correction. Now, I think we're coming out of that. I did say at the time that it was going to be roughly 4 to 6 months underneath that all-time high. And as we looked at previous corrections and how long the consolidations lasted for BTC, sometimes they moved out to around 200 to 210 days. So, around 7 months. So at this time, we're looking 4 to 6 months. Maybe it extends just that little bit more. But nonetheless, at that time, almost no one was looking for a correction in the market. It was just all guns blazing. Now, in this particular video here, I talked about how this is possible at the peaks when the fundamentals are different. And the fundamentals are different every single cycle. We've got the ETFs this time around. Last time around, we had a super cycle narrative. The time before that, it was Bitcoin was all in the headlines making massive, massive gains. And there's always going to be a new, different reason. But the thing that remains exactly the same every single cycle, and why everyone misses out on selling tops and why they all miss out on buying lows, is that they think this time is different. It's different because of a different news item or a different fundamental reason, like the ETFs this time. And that's exactly what we heard in March and April, and why the masses thought that was going to be the explosive move that Bitcoin needed to have. So where do we go from here for Bitcoin? Well, first we need to recap where we sit with the stock market. We're getting close to a new all-time high. That's a good thing. Where else do we sit? Well, for the 18.6 year cycle, we are in the winner's curse phase. It's roughly 2 years in this peak. This is the biggest cycle that we're working towards. And so we want to continue to see more of that excitement and exuberance come into the market so that there is more money flowing around, and eventually it finds its way out into Bitcoin and cryptocurrencies because they are higher risk assets. What happens in this peak, in this winner's curse phase, is that people look for bigger and bigger returns. They think that they are invincible traders and investors. And so what they do is take some of these gains and start to throw it into other areas where they think there is bigger gains. You see it across the news, media, social media, all those dicky accounts on Instagram of the losers with their watches and jumping into private jets, saying that, all I had to do was buy Bitcoin and I'm now, extraordinarily rich, that sort of crap. And that stuff gets bigger and bigger as we head up into this particular peak. And that's what we'll see for Bitcoin and cryptos. It happens every single peak. It looks like something slightly different in the stock market. It looks like something slightly different in the real estate market. But nonetheless, everyone is flaunting their wealth that they've made on that ride up. Are we still seeing the real estate market go up? Because this is the most important one. I know we focus on Bitcoin, but this is where the money is made and held longer term. They're very much longer cycles here. So what I'm looking at here is the Home Builders ETF. Now, we covered it the other day, but just in the last 24 hours, the ETF, the Home Builders ETF, is up above 119. This was a key level here as it peaked out in July, end of July that is, found its low on the 5th of August, and then has been climbing back ever since. So it had a much shorter time to the downside than the S&P 500. So the investors are still seeing a lot more strength left here in the home builders, which essentially means that they're seeing more profits come into the real estate market longer term, maybe 6 to 12 months out from now. So this is going to be one that we cover very extensively for members at TIA Premium. We do have a sale on at the moment. Link is in the top of that video description down there. Subscribe to the free crypto and economic report, and you'll get that discount code in the next 24 to 48 hours. So where do we go from this point? Well, we've looked at the macro cycle, the real estate cycle. There are still a lot of positives here. The last 24 hours with the discussion or the words from Powell here is that he will be cutting rates eventually. Maybe it's next time, maybe it's not. And now the market's excited by that. Originally, they were scared by that. Now they seem to be a little more excited by that. Like I said, it's always some sort of fundamental reason. And with that fundamental reason, sometimes it's a sell, sometimes it's a buy. So I personally try not to put too much attachment to that for my trading or investing, because that same narrative can flip. It could be a buy or it could be a sell. How do you know? Well, I prefer to look at the charts, and the charts are all saying up. The S&P 500 is up. The NASDAQ still strong. Even if there is a correction from this point, you've got plenty of support levels to the downside before there's an invalidation of the current macro bull market. Plenty of that going on. And with this current rise, this current move to the upside, one would expect some sort of correction from this point. So we'll wait and see how the markets open up next week. And as we lead into September, into this last month of quarter three, we've got the US dollar also falling as well. So here is the US dollar on the way down, and then many would attach that reason, well, the Fed's cutting rates, therefore the US dollar should be going down. But look, the US dollar has been going down since 2022 when interest rates were also going up. There is the extreme peak. And basically 2 years on now, it's come down from 115 down to 100. So a pretty significant drop. In this second half of the real estate cycle, some of you might know, hit that like and subscribe if you are new on the channel and you want to continue to follow up with this cycle. This second half of the real estate cycle, you typically see the US dollar continue falling, which could be another good sign for Bitcoin and cryptocurrencies. Basically, an easing on the dollar generally means asset prices continue to go up, along with, well, more buyers than sellers, because we're in this winner's curse phase and everyone starts to get that little bit more greedy, which is a great segue into today's crypto fear and greed index, guys. Today, it hit 56. We're at greed. Yesterday was at 34 fear. So basically swung from fear into greed on this one bar, which broke out of the key 50% level and above that swing top. So that was a key level that we've been watching here on each of the daily videos. Remember that, looking at it day by day, these corrections, and then waiting for the 61.5. Now, we're at the 61.5. We need to see a few more, or at least 2 more daily closes here would be ideal to work its way into the consolidation for the next stage up, for the next test to the upside. Do I think it's going to happen within a week? I don't think so at this stage. I'm still looking to that longer term move. As we talked about in March of 2024, that was our 3-day down move from the top, that it was looking like roughly 4 to 6 months from the top, we could then expect maybe another new all-time high price. That takes us out to now 163 days below the previous old all-time high. And if we work our way out to 6 months, that date comes in as the 13th of September. And if we work our way out to 200 to 210 days as a reference point from previous cycles, that's the end of September, so the 30th there, and 210 is around 10th of October. So basically, anytime between now and I would say the first place to look is around mid-September, out to roughly as far as mid-October. So there could still be a couple of months here trading between 70 and somewhere to the lower side of sort of mid-50s, right? Now that's just a conservative look at the Bitcoin market right now. I know there's going to be plenty of bulls that think this has to go straight up to 74, and maybe it does. The idea of this is that no one knows what happens on the black side of the chart. We're just weighing up probabilities here and looking at how the markets have performed previously with these signals, and then forecasting, or at least doing our best to forecast what might happen next. Within that, then comes your risk management. Well, do I buy up a lot more here and then a little less here and then a little less as it breaks out? Or do I wait for more confirmation and then buy up a lot more here? So that's just a rough look at how you then manage your risk, which is essentially your money. And when do you put that in? Do you put a lot in now, a little bit in later, etc.? Now that's just a high level look at how you decide to put your money into the market and then get it out. Because at the end of the day, you obviously want to make some profits, so you've got to get this money out of the markets. Back to the signals here, looking at Bitcoin now that we've finally got some increased volume, relatively speaking to the previous volume, and then this breakout here. What happens next? Well, let's have a look at the monthly chart. So we had 6 straight months up for BTC, going from 25K all the way up to 74K. So nearly a tripling there. Now, BTC had to have some sort of correction It got that correction. We're in that correction, 5 months into that correction now. The end of July, so early August, I do my monthly updates, basically looking at what I think might happen next. And at that time, for that video, about 3 and a bit weeks ago, we looked at the possibility of August actually being the same as July. Now, July was green. And you might recall that I said, well, if July is green, often August will also be green. If July is red, often August will also be red. At the moment, it only sits down by 1% from July. So it's quite close at the moment. Yes, there's still 8 more days to go till the end of the month, more like 7 now. So this could drastically change. Maybe we come all the way back down and the whole game's over. But so far, it's looking relatively okay here. Just needs to close above 64,600 to get to a green August. And this would then be massive, massive buying that has stepped in at that fearful point of the low earlier this month. So that's where that extreme fear came in yet again. You guys might recall that we've looked at the fear and greed multiple times. While you're in a bull market, these levels seem to be pretty damn good entry opportunities or re-entry opportunities again, if you haven't already filled up your positions earlier in the cycle. And a lot of people, unfortunately, don't fill up earlier in the cycle because they're just not here and they take off, like I talked about with the videos. You can see at those times when it's low and slow, views drop off, subscribers drop off, most people just leave the market. So again, I know I've talked about this probably for 4 years now. Try not to be one of those people when the markets go down. So we got 6 months up, 5 months down. I think we are on the verge now of breaking out into a new all-time high within 2024. So I've got longer term timeframes here. And what we looked at in the previous consolidations, we had 6 to 7 months recently. So that was in 2023 before that October breakout. We also saw another 6-month correction before another consolidation and the breakout in 2020 to 2021. And then in the prior cycle, back in 2016 to 2017, there was also 4 to 5 months here. And then you had again 4 to 5 months before the breakout. And that's when the party really starts to get going. So there was a couple of consolidations which you are then able to identify as reaccumulations once the breakout happens. That happen earlier in that cycle, basically up to the first half of the cycle, which then leads into the second half. So that's what these big squares here, you got your left and your right translated cycles. So within the left, the first roughly 18 months or so, consolidation 1, consolidation 2, consolidation 3, and then the breakouts. And you get these really fast moves happening. Then the next cycle here, consolidation 1, about 4 months there. Another consolidation happened here on the way down, and then a third consolidation before these big breakouts. Now we're into our possibly third, maybe second. You could potentially consider this being the first consolidation, then the second, then the third. And that would lead us to this second half of the cycle, being this right translated cycle and the breakout into the peak at whatever time that happens to peak. In a previous video this month, I looked at the quarterly swings, and I'll update this again with our next monthly update. So you can see the quarterly swings here, one swing, then blow off top. Last cycle, you had one quarterly swing, up and down, and then you get into that blow off. We're into that quarterly swing now. The swing has happened. So if it continues to break down from this point, well, game over. That's the invalidation. But so far, it seems like things are on the up and up. When you look at the real estate cycle, basically more money flowing into real estate, more money flowing into the stock markets. That's undeniable now. We've got more money in there. And eventually, I think you're going to start to see more and more of it come into Bitcoin and cryptos, which then lead into that final move to the upside. So I'll come back to this in future videos for those monthly updates. So stick around on the channel, hit that subscribe. And if you are subscribe to the free Crypto and Economic Report, congratulations to you guys as well. There were a few trades that we had in there over the last week or two. One that we had on the watch list was Aave, so nice work on getting that gain. And one with the members we had was looking at Say USDT. So another pretty significant gain there. As I said, link is in the video description for TIA Premium if you guys want to join that, get on board for this bull market season and learn how to create your own trading and longer term investing plans. So over to the total cryptocurrency market cap. We looked at this and where the strong and weak levels were. 50% level, 2.206. And the daily closed almost dead on that, 2.208. So just slightly above it. This is still good science. As I said, it's exciting. I'm excited. The bulls are on, but let's just not get too carried away. I'll talk to myself in this one. It's a reflection on me. We can still see further downside. We can see some sort of corrections. At the moment, I think this is a reasonably good area. I'll say area for the bottom because we've seen one crash back in July, the recovery, and then another severe correction, which went lower. However, it was a fast reaction to get back above those lows. That's what you want to see with any sort of corrections that go below the previous low. So I've said many times before, I had no idea that Bitcoin would correct, or the total markets would correct this far. However, just looking at the signals that we saw back in March, we knew there was some sort of correction coming, but I don't claim to know exactly where it's going to go. When you see it correct dead onto 50% levels and then bounce back to get back above key support levels, well, then it's a pretty good sign that it's just a matter of time until you see higher and higher prices, because we are looking at longer term timeframes. Remember, it doesn't happen overnight. And so that 50% level that it bounced almost dead on was the bull market range. The low here at 730 billion to the top at 2.7 trillion. It corrected over the course of 5 or so months down to $1.7 trillion, and now has bounced back above all those swing bottoms, which is a really good sign. And so I'm using the TIA GAN swing indicator. Again, there's a link to that in the video description as well. But looking at where the current price is, where we got out of this little bit of a choppy range above the 50% level of the correction, and now it's attempting to get back to the more important 50% level, the longer term 50% level, which is the correction range, and that level is $2.2 trillion. So hopefully over the coming week, more closes happen above here. If not, happen above the previous swing tops or around the 50% level. So 2.06 is the ideal level. But for that added sign of strength for the crypto market, the total crypto market that is, closes above 2.2 trillion is the strong level. So onto ETH and then Solana as well. Just looking at this macro move that we've just seen with this popping of the prices here and some of those swing tops as Bitcoin broke out. So ETH still in a slightly weaker position here because it's not above the previous swing bottoms. That doesn't mean that it can't do it. It just means it's in a slightly weaker position than other cryptos overall. And I'll show you one in just a second. And most of us can guess which one that is. And no, it's not XRP. Back to ETH though, the 50% of that correction into the August low, 2,765. And note how close the market gets to these. It's dead on that level once again. So this is a really good sign that it's attempting to come back to get into a stronger position. The strong position now is above 2,900 US dollars, above all of these swing bottoms, above the 50% level. And that range is from the all-time high down to the bear market low. Slice it right through the middle, gives you a round number of roughly $2,900. So that is the key level for the next week or two for ETH to get above. Consolidation there gets it back into that stronger position. And what happened in August was basically just a flush out. The bears came in, said everyone was wrong. Why didn't you get this? The whole market crashed. And now in a matter of a few weeks, potentially it gets back above 2,900 and everyone missed out again at those lows, $2,100. That leads me over to Solana, which is in a stronger position here, got back above the 50% of the correction. There is your 109 up to $194, slicing through the middle at 152. So another nice close above there, slightly higher volume in the last few days, but ideally for that stronger position, Solana closes above 152 for the next few days. Now you might recall that we were watching a lot of these swing tops at around the 160 level, and then also the previous top here at about the 190 level. So it tested it, failed, crashed, and then came back above. So this is all looking good so far, that was all a flush out. Basically, it tested the top, came back down, washed out the lows, and so far is still sitting above the major 50% at $134. So a lot of this is the shorter term stuff, trying to reclaim those price levels, and provided it continues to remain above 134, like it did through that crash, one quick crash, close, and then back above, then you've got more strength to Solana, which is in a stronger position than Ethereum overall, which potentially, well, means that it could potentially be a stronger runner when this bull market or alt season comes back for the rest of the crypto market. Overall, things are looking pretty damn rosy for Bitcoin and cryptos. I know it's been quite some time here. We looked at the 3 days down back in March, got to this crash. I think we're over that now. It seems like that low had been forming for quite some time. Needed a flush out in July, another flush out in August. But as you can see, it quickly came back to above that $56,500 each time it got that flush out, and it didn't consolidate under those levels. That's the key thing here. I'm not saying I called it 100%. I never do. I don't try to. I will never be able to call the market 100%. But I think this is a good post to end on. This is a fantastic one here. So follow it on X and have a read of it over there. Essentially, we are looking at why things happen in the market and try not to make too much of a logical sense out of it, and just focus on how to make life easier for yourself as a trader and investor. Links for this will be in the video description. Otherwise, I'll see you back here at the next video. Hope you have a fantastic weekend. Like, subscribe, all that sort of jazz. And don't forget about the TIA premium sale as well. Take care, have a great weekend, and peace out till next time.